First one I want to talk about is investor cash flow. And what this means is they're called DSCR loans. And that's been a popular term in investment banking and commercial lending for a long time. And DSCR basically, it stands for debt service coverage ratio. So those four words together, debt service is how much money does it cost to service the debt on a property. So you're going to have, it's just like your PITIA payment on a home, right? So you're talking about your principal, interest, taxes, insurance, HOA fees, any association fees that come along with the property. What is your total cost to carry that home monthly? All right. So this investor cash flow is for investors only. We cannot do a DSCR loan on permanent primary residence or a second home. It has to be investment property only. So the reason for that is you have to be making an income from the property, because that income is what qualifies you on whether or not you can get the loan. So typical situation here is you have an investor, maybe they're a new investor, maybe they're a seasoned investor who either does buy and holds or rehab loans or wants to do a quick in and out flip or whatever the case is. They might not be able to qualify on paper under conventional guidelines. So maybe they have a lot of debt that gets paid by their renters, or maybe their tax returns have been written down to show very little income to avoid a tax bill. Maybe they're not established yet in their investor business and they can't just go out and get a nice cream puff type bank loan to work for working capital. So where these come in is if you or I or anybody here wants to go out, purchase an investment property, got to come up with 20% down minimum. Credit scores start at 680. So you don't have to be top of the line credit to be able to qualify. The qualifications based on property cash flow. So that means if you have a property that can bring in $2,000 a month in rent and you're charging $2,000 a month, if that $2,000 pays for that property on a 1-to-1 ratio or greater, so if it costs you $2,000 to carry it and you make $2,000 in rent, then that would be considered an approval. The biggest benefit here is that we do not need to look for personal income. So we're not looking for pay stubs, tax returns, W-2s, bank statements. We're not looking for anything like that because we don't need to prove that your income can carry this property, because the property is carrying itself with a renter in it. No employment verifications are needed, so we don't even need you to be employed. As long as you're able to have the 20% source and season down payment, you're good to go. 30-year interest only is available for this because these typically are not forever loans. They're really a loan to get in and out of a property or to secure a property until you can refinance it into a longer term option. You must own a primary residence. We're not just going to give somebody a loan on a piece of property without them having a track record of homeownership. So we want them to be homeowners to start this. Non-permanent residents allowed. Gift funds are allowed for that 20%. These loans can go up to $2 million, but they have a $100,000 minimum. There's no limit on the total number of properties to do this with. You could do 10, you can do 2, you can do 1. We could do purchases or cash out or rate and term refi. It doesn't have to only be a purchase. So if an investor owns a house free and clear, they can get a DSCR loan on that for a cash out. Or if they have another type of hard money loan or something like that, they can convert it to DSCR with no problems. So all of those loan types are available. And something real common that investors want to do is they want to use a Fannie Freddie conventional loan and they want to close in an LLC. That is not allowed in your conventional world because of conventional loan guidelines. Fannie and Freddie don't allow a borrower to close in an LLC. However, you can close in a trust, and that's usually the workaround. If they can't do the LLC, go get a trust set up and close in that, and then transfer that to the LLC in the future. But DSCR allows you to close from day one in your LLC's name. So that's a big plus. Condotels are now available under this program. Condotels have always been your kind of the redheaded stepchild when it comes to property types. And if you don't know what a condotel is, those are the ones, if they have like a front desk, then basically they're considered a condotel. They're kind of a condo, but they're kind of a hotel as well. Not your typical condo development. These are for shorter stays, heavily intended to be used as like a motel hotel type thing. Delayed financing is available. What delayed financing means is if you find a property that comes up for sale and you have the cash to buy it and you don't want to wait on a loan process because the market's hot or moving fast or you've got to snatch this thing off the market, delayed financing means you can pay cash for it and then refinance it as soon as the day after. So once you take title and own it, you can turn right around and refi it and then get your money back into your account instead of having all your cash tied up into one